And we're live, traders. Welcome back to the fourth episode of this system development series here on the BluFX YouTube channel. Now, as always, I'm joined by Cas from CDFX Trading. Cas, say hello.
What's up, guys? How you doing?
So today we're going to talk about testing your system. So far in this series, if you're just catching it now, you haven't been following the series so far, this is the fourth episode. If you start watching from this point on, you're very welcome to, but it might not make a lot of sense to you if you're completely fresh and new to trading. I would definitely recommend watching this series from start to finish. So in the top right hand side now, pause this video, go to the first episode, watch it all the way through, don't go anywhere, watch this series in order, it'll make a lot more sense for you. Today we're talking about testing your system. We've already spoken about trading concepts, picking concepts that work well for you, and obviously you're given a very brief overview of why developing your own personal system in the market is a very, very important thing to do if you want to be consistent in the long term as a trader. Today we're talking about a very important step, and in my opinion, it's the most important episode yet in terms of forming your relationship with the market going forward. I think without further ado, let's get into the first slide. Cas, take it away. Let's go. So as always in these episodes, we do have a disclaimer. I will spare you me reading it out. I'm sure you can pause it and read it if you'd like to. Neither me or Cas are qualified financial advisors. Whatever we say is our opinion. If you make money in the market, fantastic, go spend it however you like. That's your responsibility. If you lose money in the markets, that's also your responsibility as well. If you want to get into the nitty gritty, pause it, give it a read. But otherwise, let's get on with the presentation.
All right, so why test your system? That's the first point we're going to talk about today. Basically going over the two most important reasons why the testing phase is absolutely crucial to your success. You can learn concepts, you can establish rules, but if you don't know how to properly test it, it's all a waste of time. So that will be the first point. Then we go over different ways of testing, key points to consider when you start testing, then how to backtest your system, basically going over the approach you can take to test your own system step by step. And then we're going to recap and preview the next session, which will be about us showing you how to do it.
Looking forward to that. It's a very special episode coming up next, guys. We're going to actually show you how to test a system in real time. We're going to pick a concept, we're going to run through it. That's next episode. But before we talk about that, let's talk about why testing your system is so important in the first place. Now, when we talk about testing your system, to give you a very brief overview of what we mean, you pick a trading concept that you enjoy. You pick candlesticks, you picked an indicator you like, you picked a certain price action rule, breakouts, fake breakouts or fake outs. You need to go and test that now. You've got a rule. So when this happens, I will do this. It's all very well saying that, and that will give you a certain level of consistency because you're following a set of rules now. A step in the right direction, definitely. But you need to know are these rules actually benefiting you within your trading? Is this actually a positive effect on your trading and trading performance overall? So collecting that data, collecting those statistics, having the faith in your system and knowing that the rules that you follow actually allow you to get more money from the market, have more pips, and take better trades is definitely a beneficial thing. So statistics create confidence. Data creates confidence. And when you have that confidence in your system, you're much less likely to break the rules of your trading because you know that if you just stick with what you know and what you've learnt and what you've tested, you're going to have a certain level of consistency and you're going to have a positive result, more so than you would have had if you were just trading by feel. Let's keep it rolling. Knowing your edge. Cas, take this one away.
Yeah, so the next reason to test your system is knowing your edge. And like Christian spoke about it, you need to have the confidence in your system. And we spoke about earlier about having an edge, and an edge is vital because if you don't have one, you shouldn't be trading at all. So that should be definitely a reason to test to see if you have an edge. And then it's all about knowing your edge because everyone has a different edge in the markets, and you need to know your edge. You need to know why it works, when it works, how it works. And when you start testing things and when you get a statistics about it, you know exactly, for example, all right, in the first quarter of the year, I know my statistics, based on my statistics, my edge works better because usually the markets are trending or whatever it is for your system. But really knowing your edge allows you to know when you should scale up in your trading, when you shouldn't be trading, and basically allow you to get more money out of the markets with your system.
All right, so moving forward, here we are, different ways of testing. Now, last episode we explained about the different concepts you have within your trading, concepts that you can pick, concepts that you enjoy learning about, that you identify with. But the first step before you enter this chapter of your trading journey within building your system is to pick that concept. Now, the next is the all-important step. It's about testing and putting that concept, putting that rule through a certain test to see if it actually results in a positive effect on your account. Now, we look at that like this in stages. The first stage is to back test that rule. And what this is basically is where you go back on the chart, you look at historical data that's already happened, you apply that rule where you've got an entry point, an exit point, whatever the case may be, and you see how it would have resulted over a period of time. Now, obviously, if you go for 1 year, 5 years, 10 years, whatever the length of time you want to test, this data is already there on the chart for you to collect because it's obviously happened previously. You're taking the chart all the way to the left-hand side. You've got to pick a time frame, you've got to pick a currency pair, and that is basically it for backtesting. But here's the important thing to remember. You have to be very meticulous and methodical with this. You have to collect data. What you cannot afford to do is just to eyeball the chart and look at it and think to yourself that you would have won a trade there and you would have exited the trade there, etc. You have to do it either old school, pen and paper, write down your entry point, your exit point, and mark down whether it was a winner or a loss for that trade. Or you can do it in the more modern way and use a spreadsheet. But collecting that data for backtesting is crucial because when you move forward in your journey, you want to have some record of how things perform because you want to be able to compare them against other rules, other parameters that you're going to backtest in the future. Backtesting is where I spend a lot of my time, especially on the indicator side of things. And I'm still in that stage right now. I've backtested a lot of indicators, a lot of rules, and I know which ones are good and benefit my personal system. But I'm still on that journey now. There really is no stop for me. I'm still trying to progress and improve my system over time. So that is backtesting in a nutshell. One important thing to remember is please collect that data in a very methodical and logical way. You cannot do it just by eyeballing it and not making a note of anything because it's going to be very hard to compare that in 1 month, 2 months, 3 months time to something else. So next stage, after you backtested it and you're happy with the results, you found something that works. Next stage, come on, Cas, keep it moving.
I want to add something to backtesting because we wrote down automated and manual. And there are different ways to backtest. People code an EA, people go manually over the charts. And it really depends on what type of rules you have because some people have clearly programmable rules. And usually those are the easiest to test, especially if you are a beginner, you definitely want to aim for those. But some rules are a bit more discretionary and that makes it harder to automate them. The benefit of automated testing is definitely that you don't miss any data and the data is very accurate. However, the benefit of manual testing is that you build way more confidence because you see it yourself, you see it over and over again, you see the setup playing out and that really enhances the confidence you have in your strategy. So it's up to you when you're going to backtest to think about which way suits you best and if your rules are actually programmable and automatable. Each different way of testing has its benefits and find out what works for you.
That's it. And actually, it's interesting you mentioned it because I've only realistically stuck with manual testing because I am an indicator person. It's very easy to measure what is an entry, what is an exit, that sort of thing because it's very easy to understand. You've got the data and it's a very data-driven approach. But when you've got these more discretionary rules like certain candlestick patterns, it's going to be very hard to automate that within an EA, an expert advisor, when it comes to testing your system. So Cas is very right in what he says. Depending on the approach that you take with the concept you choose, it may be that you have to do it manually. You may be able to do use an expert advisor, but it's just about what suits you as a person. I've always done it manually. That's the way I found it easiest, and it's also about building confidence, as Cas said. So
exactly. Yeah.
Cas, take this next point away. Demo trading.
So once you have tested your system and you have a proven edge, so that's important. You don't go to demo trading if there is no edge in backtesting. That's ridiculous. It's the same thing as going to live trading when you haven't been profitable on demo. You should take every single stage seriously and go one step at a time. So if your backtesting is profitable, and you didn't cheat and you didn't cherry pick and all those things, and it has been proven to give you an edge in the past, then it's time to go demo trading. And with demo trading, the goal is to execute your edge the same as you did with backtesting. So you want to have almost identical data there. Now, of course, different market phases happen. You make mistakes because sometimes things can be backtested, but it's way harder to execute in demo trading. And that's why you go to demo trading, because if you start trading live and you did a demo trade, you are paying for these mistakes. When you trade demo, you aren't paying for it. You can learn from it, you know down the mistakes, and then you can see, okay, all right, how can I implement certain things to fix the problem? And you go from there. So it's important to start demo trading after you've done back testing. And only once you're profitable on demo for a certain period of time, then go live.
That's it. Demo trading is a very important step. But of course, I think when you go to backtesting, that is where you filter out a lot of these rules that wouldn't work for you in your trading. So demo trading is sort of like everything will go through the backtesting phase, but only the best of the best will get to the demo trading. And then after that, after you've demo traded, after you've done a decent stint, I'd say at least 3 months of consistent demo trading with the same edge, with the same rule that you've backtested, do you then move forward to the next step, which is live trading. Cas just mentioned, if you don't do these first steps right, if you are not collecting data properly, you're giving yourself excuses why you wouldn't have taken trades in backtesting, or you're not demo trading properly to the rule that you've actually tested, you're going to pay for it when you get to the live trading stage. Everything will be exposed. Bad backtesting and bad demo trading will be exposed when you get to the live trading phase. There's no point rushing it, because at the end of the day, your money is now on the line. Whether that's $100, $1,000, or $100,000. If you haven't got your edge and you haven't defined it and you're not confident in it, the live trading stage is just a waste of time, because you're going to actually be paying for the mistakes that you make. Now, there is a certain element of testing still going on in that live trading, but I find it's moreover a test of your psychology, your ability to stay disciplined and actually stick to the edge that you've tested, not only with back testing, with demo trading as well. So the live trading really is the final stage, the final stage. And if you haven't done the first 2 stages properly, then unfortunately, you're going to have to find out the hard way. But as I say, Cas mentioned it, it's so true. You're only really kidding yourself at that stage if you haven't done the first 2 steps properly, because you're now paying for your mistakes. So that was kind of a wrap up of the 3 ways of testing your system, the stage that you should take each concept through. I think next slide, let's move on. We'll talk about actually how to backtest your system, right? How to actually do it. We talked about the stages, the first one being backtesting, and I briefly touched on it earlier about a spreadsheet. Now, the word spreadsheet, I won't lie to you, it can be a big deal for some people who are not used to collecting data in this way. But there's no better way in terms of organizing data in one place where it's clear to see than a spreadsheet. Now, you don't have to go mad with it. You don't have to make it all these crazy colors and all this sort of stuff. It's very simple, and you don't actually have to learn a whole lot just to record data. But it's a very clear-cut and easy way, an organized way to have data stored there, and you'll pick things up as you go along. You'll actually learn a lot about collecting data, about how to compare it to other sets of data that you've got, but it's the only way to do it. There may be a little bit of a learning curve there to actually put this all together, build a spreadsheet. If you haven't had any experience doing it in the past, but you can do it old school, you can do it pen and paper, but it is firmly of the belief if you take a little bit of time, you take a little bit of effort just to learn how to do it with a spreadsheet, I promise you'll never look back. Cas, you have anything to add?
Yeah, I totally agree with you. And when I first started my testing, I always did everything manual, just like Christian now was doing. And I didn't know anything about using Excel or spreadsheet or whatever. But now, just because I try things out, now I actually know how to build a spreadsheet. And like Christian said, it doesn't have to be a fancy sheet with colors all over the place. It's about testing a few different things and keeping it organized. And that's basically all you need to begin with testing. Further on, you can start testing filters or whatever you want to test. But just start very simple, very basic. And like I said earlier, in the next session, we will actually show you how to build it. But for now, you definitely need to know that a spreadsheet, in my opinion, is the best way to start testing. And just start with it. Just experiment with it. And just during the process you will learn a lot. And a lot of people think this is boring because of the word spreadsheet, but also numbers and stuff. But it will pay off. It will definitely pay off.
There's no better way to do it, and I think this will make a lot more sense come next episode when we show them how to do it live,
Yep.
and we'll show an example of a spreadsheet that we're actually using. As we say, the word spreadsheet can be a big turnoff for a lot of people, but stick with us. Next episode, we're going to show you exactly how it's all put together and how that works. But there's no better way to do it. I think that's what me and Cass both believe, and I would be very surprised to find a trader who actually has taken backtesting quite seriously, who's still doing it old school with a pen and paper. So that is the first stage. Backtesting a system, you need to make sure you're using a spreadsheet. Let's keep going. Cass, please.
Yeah, so the last session was about concepts and then building rules around the concepts. Now, when you are going to start with testing, it's very important that you have written down the rules. And I usually do this at the top of my spreadsheet. So at the top, I write down all the rules that consist my strategy of. And then it's there. You don't have to think about it. You don't have to guess, oh, what was the rule again? You can actually test it and you have it in front of you. And it makes it way easier to follow the rules. And your backtesting data will be way more accurate that way.
That's it. And you need to make sure that in your face and we can remember these rules. If you're testing a system, please don't have them any more ambiguous than you need them. That's not a very good way of explaining it. What I mean to say is, especially with these more discretionary style rules, have them written down. Make sure you're consistent across the board. If you started testing it in a certain way, you cannot chop and change. If the first trade you've tested, you followed a certain version of this rule, you need to keep it consistent. So having it written down, top of the spreadsheet, having a little post-it note on your computer monitor. Back in the day, I used to work on the trade floor. You'd see all of the traders around the whole screen would be little post-it notes about their system, about psychology. It's something about having it there in front of you. Make sure that you don't forget it, you can't ignore it. And it's sort of drilled into your subconscious mind. This is the rule you need to follow. And that is especially true for backtesting, because there's no point testing things if you change it up and you're not keeping it consistent, because then the results won't be consistent and they won't be valid. So rules, have them there, have them in a place that you remember them, you can see them, it's clear, somewhere that you're not going to forget them, and you're not going to have any excuse to not be consistent. Write them. Sample size and time span. Now, I spoke earlier about sort of taking the historical data back 5 years, 10 years, 1 year. That's for you to decide. Obviously, understand the longer you test things, the more consistent and the more valuable results will be, the more data you'll have to collect. But it will take longer. But if you want, I would recommend to start with something small. Start with like a year and start with a single currency pair. Take your concept and rule through a year on a currency pair and just see how it performs in that first year. I think you'll see pretty quickly within a year how things are performing and how this rule is actually working in the markets. And then you'll see from that data, is this something I want to pursue further and test at a 5-year period, a 10-year period? Mind you also, there's so many variables as well. Maybe the rule that you've got gives you 10 entries every week versus one rule that gives you 1 entry every month. So this is gonna vary a lot in time. Number one, it's gonna vary on the time span that you pick, in terms of how long you're testing things over, the sample size, and the fact that again how long you're testing things over, but also the time frame of the chart. Are you testing it on the daily, the hourly, the 15 minutes? So there's a lot of things to consider. You have to really understand where your system is going to perform the best. I've always stuck with the daily chart for my back testing because that is the time frame that I trade on. If you stick to the 15-minute or the hourly, try and stick with time frames that you're actually likely to trade on in the future. There's no point back testing something on the daily if you actually end up trading the 15-minute, because some things will work a lot better on the daily than they will on the 15-minute. So there's so many variables to choose from here: time frames, the sample size, the actual concept you're trading, and how long it would take you. One word of advice is find the rule. You've got the rule in your mind. Pick the rule, put it to the paces on a one time frame that you usually will trade, something that you're familiar with, whether that's the 15-minute, 4-hour, daily, whatever it is. Do a year's worth of back testing, and you'll see pretty quickly, I think from a year, you have a decent impression of how it performs. And you'll see if you want to pursue that any further, to test it for 2 years, 3 years, 4 years, to have more data and a fair representation. So that's my first level of advice. You don't need to test everything to 10 years because you will waste your time doing that. There's no point testing something that's not very good. If you're going to test it over a 10-year period, just stick with 1 year to start with, and you'll see how it performs from that first impression. Yeah. What do you reckon, Cas? Anything to add?
Yeah, it's funny because I almost have the same approach when testing. So when I'm testing something, I pick a currency pair and then I just test it for 50 trades and see how it performs. And if there is no edge there, I don't go to 100, 200 trades because that will be a waste of time for me. A few more important things about sample size. You definitely want to have a big enough sample size because if you're testing something for 30 trades, when in the past year maybe 100 trades happened, this data is not reliable. So you really want to think about how big the sample size is going to be. First start with maybe 50 trades. If there is a clear edge there, then pursue to 100, 200 trades. It also depends on your time frame, because if you're trading the hourly, you might have 100 trades a year. If you trade the daily, maybe you have 10, 20 trades a year. So that's definitely something to consider when you are going to test. And yeah, time span, of course, like Christian said, start small and build up. Usually my way of doing things is I want at least to have 100 trades, but that's because I trade the daily time frame, and 100 trades happen in around, it depends on the pair, 7-6 years. So I go back 7 or 6 years. But if you really have high frequency and you have maybe 200 trades a year, in my opinion, it's not worth it to go back that far. Also because the markets were a bit different 5, 6, 7 years ago. So that data might not be entirely reliable.
Well, that's it. I mean, backtesting is not, I won't pretend for a second, it's a perfect way to judge the performance of your system going forward. But it gives a very good indication. And I think one thing that makes it a lot clearer actually from what I said earlier, 100 trades is a decent standard to follow. If you can test something to 50 trades and just see how it performs and see if you want to pursue it any further. But if you took every rule in your system and you test them at the very least 100 trades, you'll be able to see if it actually gives you any form of edge. But you'll see from the first 50 trades is like the trial, and continue to the 100 if you want to pursue it and you actually think there's some potential there for a decent edge in the market. So you really have to come up with this on your own. I think picking the time frame you're going to test it on, seeing how far back in the charts you want to go. But please understand, backtesting is not perfect, but it is a great indication of the performance of your system going forward in the future. The markets have changed a lot in the past 10 years. Perhaps some currency pairs are more volatile now. Perhaps there's different fundamental themes in the markets. Think about Trump, think about tensions in China, think about different people who come to power across different parts of the world. All of this sort of stuff. There's definitely different themes and things to be aware of, and the forex markets are actually potentially more volatile than they were back then. So there's a lot more opportunity in that sense. So it's not a perfect way of testing in terms of, it's not going to be 100%, but it will give you a very good impression. Right. Let's move swiftly onwards. Platform. Cas, I think you know more about this than I do, so take this one away.
Yeah, so platform is really basic. You want to highlight in your spreadsheet what platform you used and which data you used, because the Forex data you get from your broker is different from the data another broker has. And if you test on one broker and then you run it on something else, let's say you put it into an EA, the performance can differ quite a lot. So you want to highlight which data you used and which platform you used to backtest.
Yeah, pretty straightforward that one. Make sure you keep things consistent across the board, and that there's no excuse for changing broker. As I say, things will be slightly different, and this can make a big difference when you're testing across 100 trades. Small differences like that will add up. So make sure you're keeping things consistent in every way possible. All right, so we've just spoken about how to backtest your system, and we're going to skim through a little template you can follow. This is going to be quite content heavy, this slide. We're going to try and blast through it as quick as we can, but just be rest assured the next episode we're going to go through this live with you. So if you don't understand anything, number one, you can drop a comment down below. We're happy to help you out with any questions you have. Number two, stick around to the next episode and things are going to be made crystal clear for you. First step, as always, is to take action and to make sure you're putting the time in that's required to make this happen. There was times in my life where I'd rather be having fun with my friends or enjoying myself versus sitting at my computer and backtesting after I finish work of an evening. But that is the stuff that adds up in the long term and actually means that you are in better stead for a career in Forex trading, and it's an investment in yourself as a trader. Now, number one, first step in this template is determine what type of backtesting fits best and start there. Now, in this example, we can talk about things like, are you more suited for manual trading like I was, or are you going to be a more automated style trader with EAs? That is for you to decide. But it's also things like what time frame you're going to test on, what currency pair you're going to test on, how far back are you going to go, how many trades you're going to initially start with for that first trial of that rule that you're testing. So building that system is super, super important in the sense that you need to determine what type of backtesting actually suits it in the first place. And depending on the rule that you've chosen, is going to make a lot of impact in what type of backtesting will suit you. Cas, anything to add?
That's basically it, yeah. So decide manual, EA, which works best, and then start from there. That's very important.
Right, so second step in this template is to build a spreadsheet. We've already mentioned spreadsheets a whole lot. We're going to talk about it very quickly again. Super important and completely crucial to your backtesting journey. And you need to have the useful things to test in there. Now, what we mean is this. You're going to have the rule and concept you're trying to test. Let's say it's a buy signal on any indicator. Let's just keep it simple. Any indicator, doesn't matter which one, as an example, is giving you a buy signal. Now, that's all well and good, but you need to understand, for example, where your target would have been. Now, you need to have this in a systematic way in a sense, but let's say price, your first target was 20 pips, and price went up 5 pips, but then, tanked down 20 pips and you would have lost the trade. So you would have lost that trade. Versus, do you have a target of 5 pips, you're trading on a super small time frame? Well, that would have been a winning trade because price actually went up 5 pips before it sold off. So you need to have some sort of idea of the periphery around that system in the sense that you have the core concept and then your targets you actually need to hit to qualify for a winning or losing trade.
Yeah, totally agree. So start very basic, write down a single target you want to hit to test, write down a single stop loss you want to test, and then go from there. Keep it simple, keep it basic.
Cool, let's keep it going. Number 3, Cas, I'm talking way too much. Please take care of this one. Test different filters.
Yeah, so usually when you have learned some concepts and you establish rules, you usually get some ideas of what if this happens? What if I place my target there? And these are what we call filters. So once you have established what the basis is of your strategy and what you want to test first, then you can make some columns in your spreadsheet, basically writing down different targets you want to test, different stop loss placements, maybe a different entry, maybe you want to scale in. Those are different filters you can test, and they might increase your performance. They might not. But usually when you're testing things, you will find some way you can improve your strategy. And that's the important part.
That's it. You've got your core concept and then you've got your further optimizations you can make. We talk about scaling in, different price targets. But I think at the crux of all of this is that core concept, how well it works. But you do have these further optimizations. And I think this whole backtesting phase can seem quite daunting because a lot of people get overwhelmed with the amount of variables there is. There's time frames, there's currency pairs, there's what you're actually testing. There's different optimizations you can make with scaling in, scaling out, moving your take profit targets, going to break even. All of these things make it seem very daunting. But start small and build up. You'll see from the first 50 trades in a very basic way, keeping it simple, how that concept is performing at its core, and then you can add all the frills later on. Cas, what do you reckon? Demo trading and journaling.
Yeah, so like we said earlier, once you've done the back testing, then it's demo trading time. And demo trading should be done to see if you can actually execute the way you did with back testing. And then also journaling. So when you are demo trading, you will almost always, you will find things that are different from your back testing. And you want to write these things down to see if it impacts your performance in a negative way. And if that's the case, you want to build a plan so that you can execute your back-tested edge the same in demo trading. That's very important. And then when you are demo trading and journaling, you want to also keep track of other things that stand out. You can take print screens of the trades you take to see if there's something that connects your winning trades. But journaling is a very, very intense topic, so I won't go in depth about it right now because then we will be talking for another hour, I think. But just keep it simple. So when you're going to demo trading, write down if you find any issues or differences with your back testing.
Cool. Now, last step, live trading and journaling. Cass just very expertly gave an overview of demo trading, but this is now live trading. The difference being is real money is on the line. Now, I spoke about it before, and I spoke about it in the sense that this is where you stand to actually lose something tangible, your money, if you haven't done these first 4 steps right. Live trading is great in so many different ways. There's no replacement for having a live account and trading the markets because there's so many different psychological aspects. There's so many money management principles that you need to have in action. And when you're actually trading with real money, things can seem a whole lot different. So bearing all of that in mind, the last thing you want is your system to fall apart because you haven't tested it properly. You need to be able to focus on your psychology, focus on what's important. Now you're dealing with real money. And let's be honest, nobody wants to lose their money. So make sure you put the time in to keep things consistent and make sure you are testing your system properly in those first 4 stages, including in the demo trading period. You can't just push something through super quickly and hope it's going to work. And you can't be inconsistent and give yourself loads of different allowances within your testing and not do things properly, not record it properly, and expect things to work properly when it comes to live trading. Because as I say, you have something to lose now. And I won't speak about journaling. Journaling is a part of trading that I definitely need to improve on. I need to start definitely go into more detail with my journaling and really reflecting on my trade at the end of the day. So I'm learning along with the people who are watching right now as far as journaling goes. But as Cass said, it's a hugely dense topic, journaling, and keeping track of your trades and how you're feeling and that sort of stuff and managing your psychology in that way. So let's not get into too much detail about that now. But the last step is live trading and journaling. So that is the template you need to follow from start to finish. From you've picked your concept, taking action from 1 to 5, sort of a very brief and simple outline of what you need to do and the order you need to take it in. Let's keep things moving. 6, last step. I even forgot about myself. Cass, take this one away.
Yeah, so 6 is basically what you will be doing your entire trading career, which will be keep improving and testing new ideas. And that's, most people think they made it once they have found a profitable system, but that's only half the battle because markets change and sometimes your edge can stop working, you will go to drawdowns, and if you keep improving, you can be one step ahead of that. And also when you are trading and you have been trading a certain strategy for maybe a year or something, you will find out things, you will notice certain things, and then you can think about, all right, but what if this happens? Do the odds of winning increase or decrease? And then you can start testing again, and it keeps it fun, it keeps it playful, there's always something new to test, and it can most likely improve your performance so you can even make more money in the long run. So that's an important step to do, but first build a foundation by backtesting the basis.
That's it. I think there's always improvements to be made, and the market is always changing. You need to be adaptable. You need to be very flexible in terms of your approach in the markets because things are constantly changing. You know, me and Cass, we're not finished. You don't just build a system and you finish and that's it. I wish that was the case, but it's not the way the market works. You have to keep on top of things, keep looking for optimizations, improvements, and get better within your own trading. And that will only build more confidence and build more profit in the end of the day. And that's, of course, the name of the game here. So let's get things moving. Now, as always, we're going to give you a recap and preview to the next episode. Find the best way to backtest. We spoke about backtesting all day today, but you need to make sure you're following the best method for you, what suits you as a person, and what suits the parameters that you are testing. So that's the first thing. Today we've spoken about finding the best way to backtest, following the template. We've just given you a template. Make sure you're trying to keep to that and make sure you're doing it in the right order. You don't want to jump around. You don't want to start demo trading first, then go back to backtesting. The sequence of events that we've given you, please try and follow them to the T because it will only help you build confidence and make sure you're doing the right things and not wasting time demo trading something that's just never going to work in the first place. Cass, talk about this one. Next video.
I hope you really follow along and take these steps serious. So as soon as you finish watching this video, start with a spreadsheet, start writing these things down because next video we will show you an example. So we basically start with a concept, then we build rules around it, then we show you how we backtest it, then we show you how we fill in the spreadsheet. So we basically go over everything we spoke about in this session. But if you already start with writing some things down, you can basically start directly after the next video. You can start testing your own thing. So please take action on this and of course subscribe because next session will definitely help you.
This next episode is all going to be very, very, very important for you to understand this whole concept of building a system in general. Now, if anything isn't clear from today, please feel free to drop a comment down below. We're happy to answer any questions you have, but we're going to explain things in a much clearer way, I think, next episode, when we actually bring you to the charts and show you from start to finish how to test a single concept. This series is all about helping you from start to finish build a system within the Forex market and actually start that journey towards consistently being profitable. Now, if you like this style of content, if you're enjoying the series so far, if you want to see more content like this in the future, like the video, subscribe to BluFX, and also subscribe to Cas as well, because he's got a channel of his own. He's got a lot of educational content over there you definitely need to go and check out. He just told me before we started recording he's actually putting out more content now. He's stepping his game up over there, so definitely don't miss out. It should be the first link in the description to Cas's channel. Go and subscribe there as well. Subscribe to the BluFX YouTube channel. Yeah, if any questions, drop us a comment. We're happy to help you. It's been a pleasure as always to bring you this series and this episode, and we'll see you in the next one.